Welcome to ForexTV.com. Today is Wednesday, October 8th. I'm Remy Hokie for New York Forex Market Buzz. The U.S. dollar is trading mixed against the majors following the unprecedented and coordinated rate cuts by the global central banks. The dollar is down against the euro and yen, but is rallying against the UK pound. Now let's take a look at the latest headlines from the CP News Desk. In an effort to stem the global financial crisis, the world's central banks collectively announced a coordinated 50 basis point rate cut. In a joint statement and simultaneous release, the Federal Reserve, ECB, BOE, BOC, SNB, and the Riksbank all moved together. Meanwhile, the Bank of Japan stood on the sidelines. The Federal Reserve delivered an intermeeting 50 basis point cut to its overnight lending rate to 1.5%. The Fed cited weakening economic activity and a reduction in inflationary pressures. Meanwhile, the ECB Governing Council reduced its main refi rate by 50 basis points to 3.75%. The ECB cited increasing downside risk to growth from the current financial crisis. The ECB cut will take effect from October 15th. And the Bank of England also slashed its key lending rate by 50 basis points to 4.5%. Earlier, the government announced a £50 billion part nationalization of the nation's main banks in an emergency bailout package. Originally, the BOE was scheduled to announce its decision on Thursday, which has been canceled. The central bank said increasing financial market turmoil more than offset the risk of rising inflation. And very quickly, looking at U.S. data releases, according to the NAR, they announced that U.S. pending home sales unexpectedly soared by 7.4% in August. The index now stands at 93.4, up from the previous month's reading of 87. And this morning, the EIA reported that crude oil inventories surged 8.1 million barrels in the week ending October 3rd. The latest reading came in much higher than expected, and crude oil futures are now trading lower by over 3%. Joining me this afternoon to discuss today's rate cuts and the majors in the currency market is Dan Cook, Senior Market Analyst from IG Markets. Good afternoon, Dan, and thanks for joining me today.
Thank you, Remy.
Well, we finally saw a coordinated global intervention from the central banks, and many investors had been optimistic about a coordinated effort. Yesterday, we did get a surprise 100 basis point cut from the RBA, and today the central banks of China, Kuwait, and the UAE are also following by slashing their rates. But my first question is, how effective will the latest moves by the central banks and national governments be in terms of alleviating stress in the financial system?
I think that's really still yet to be seen. The markets, from the financial markets as far as securities, we're looking at the Dow. It's been just on a wild roller coaster ride all day. The markets are still trying to sort out. From a currency perspective, it's really been that coordinated effort, and it's really seemed to balance out the majority of the currencies, meaning one gaining strength as opposed to when we see just one country. It does show a good unified effort, and I'm fairly optimistic. It was speculated and confirmed that they would make a unified effort, but with the globalization that we see and the tightness really in the credit markets around the world, they had to act together. They had to be simultaneous and show a united front that we're going to take care of this problem. In the long term, I don't think it'll be an immediate reaction. I think the market will take a little time to sort that out. I do think it's a step in the right direction. We're just seeing really devastating effects from the current turmoil in the banks around the world. And having a united front, I think they're still going to have a lot of work to do together, and this will have to be a continued effort from all of the central banks. I do think it's a step in the right direction to help ease some of this pain.
Well, Dan, we know that there is plenty of volatility across all markets, and we can tell by looking at the VIX we are at record highs. And not surprisingly, we're seeing wild swings in price action for the major currencies as well as equities. But let's take a closer look at euro-dollar first. The euro did spike above 137 to highs at 137.42 at the New York Open, but we have been fairly range-bound between 136 and 137. So fundamentally and technically, short-term, what is your forecast for euro-dollar?
For the euro-dollar, they still do have a bit of struggles. They have been gaining really throughout this week. A lot of the dollars being pumped in to the market. The Federal Reserve auctioning off $150 billion on their 28-day, $150 billion on their 84-day. So we're seeing a great supply of dollars being pumped in to improve the liquidity and ease the financial turmoil. That's definitely helped the euro to gain some strength versus the dollar. In the near term, I'd really look for more of a range to continue the rest of the day. I'm looking for it to really kind of settle down a bit, ease off as the liquidity dries up. Shorter term, throughout the rest of the week, I'd be looking maybe for the euro to continue that rise up, maybe to around the 138.50, 139 range, where we should see some resistance. And on the downside, if the dollar would strengthen, I'd look for support around the 133.50, 132.50 range over the next week or so.
Okay, Dan, now that we've covered euro, let's move on to sterling. The UK currency continues to get pounded against the dollar as well as the yen. Now, we'll get to the yen later, which is mostly higher across the board. Now, sterling dollar broke below 173 to hit fresh annual lows, and on the weekly, daily, hourly charts, the pound is bearish. So given the outlook for the UK and for sterling, there is little in the way ahead of 172.30, the lows from March 06. So in the near term, what is your outlook for sterling?
The 172.30 level is the level that I'm very interested as well. That is the low from back actually quite a ways there. And so from a technical perspective, I'd be looking to find some support. From the fundamentals perspective, there is absolutely no good news coming out of the UK. Financially speaking, our turmoil, while as bad as it is not near what they're witnessing in the UK, from housing to unemployment. There's also some speculation that in addition to the 50 basis point rate cut we saw today, that they may even go a step further, depending on the reaction to the markets from what we saw earlier, and cut again almost immediately. So that would definitely drive down the value of the pound typically. If we do get a bounce off the 172.30 level from a technical perspective, I think it will be fairly short-lived, could be a good opportunity. Breaking through that level, I'd look to head down somewhere around the 170.50 level. And I think that would happen pretty rapidly if we can make a clean break down below 172, 172.30.
Okay, Dan. Well, now that we've covered the euro as well as the pound, let's look at the Japanese yen. Now, equity markets are seeing plenty of volatility and are back down in negative territory right now. And dollar yen is back below 100 after recovering above the level and trading lower. And the yen crosses are seeing weakness, with sterling the worst performer in the yen crosses. So going forward in the short term, what is your recommendation for the yen?
With the yen, the strength seems to be there from both a technical as well as fundamental perspective, particularly in the crosses with the euro and the pound. We've talked about the pound and their weakness. In these times of volatility and uncertainty, the yen really seems to be the currency to run to. I could continue to see the yen really gain strength, particularly against the euro and the pound. Now, on the dollar, we did see a bit of a bounce today. It did bounce right off, for those that follow Fibonacci ratios. It bounced pretty close to that 78.6 level for drop from where it was below this year. So we could see a bit of a bounce. I'd still look for continued strength from the yen. The Bank of Japan is actually conducting auctions to basically pump U.S. dollars in the forms of 20 billion currently and then 30 billion later this month. Really, I look for continued strength against the yen. The opportunities to get in short would be if we do see a type of bounce, any type of pullback from that rapid drop we've seen, particularly in the euro and the pound. Right now, though, I don't look for those positions to change. I look for that drop to really continue for the euro, for the pound, and for the dollar against the yen.
Okay, Dan. Well, now that we've covered dollar yen as well as the yen crosses, very quickly, let's take a look at the Aussie dollar. Now, the charts for Aussie dollar and Aussie yen look very similar in terms of price action today. And Aussie dollar has not seen lows at 64.32 since September of 2003. So, given what we're seeing technically, fundamentally, what is your outlook for the Aussie dollar?
Fundamentally, the Aussie, really I'm looking at the commodities market to kind of give me an answer to that. It's basically fallen off of a cliff from what we saw earlier this year in July. It's been a straight drop. Doesn't look to really change that much. It will be dependent. We had the oil announcement out today, 8.1 million barrels, which just blew out expectations. We've seen oil drop. I think it was down about $3 last I looked. And so we're seeing this really affect the Aussie. On Monday, they started everything off with the rate cut as well, which continued to weaken theirs. And I don't see the momentum on this really slowing at this point. One thing, typically, the Aussie, as we move into the fall months, would typically get a little bit stronger. With the pullback in the commodities prices, that may not happen this year. We are looking, according to the Energy Information Administration, possibly moving later into this year, colder winters than expected, fuel oil prices may increase, so we may see a bit of bounce. If we do in the commodities market, I'd look for the Aussie only at that point to gain a little bit of strength. Without some type of improvement in price, or whether it be improvement or just higher prices in the commodities, it's going to be tough for the Aussie to recover.
Okay, Dan, well, last but not least, now that we've covered most of the majors as well as some of the crosses, looking ahead, we will be keeping an eye on equities, broader market developments, and also this afternoon, Treasury Secretary Paulson will be speaking at a press conference to discuss the response to the financial meltdown at 3 p.m. Eastern. But going forward, and we know we have a lot to monitor, what will you be watching and why?
One of the things from a pure trading perspective, I've been looking a lot at the CAD. The U.S. dollar has been on a good run-up here as of late. We've recently hit a high fib level where we may see a bit of a pullback in the dollar CAD over the short term, but I do look for that trend to continue. Right now, I think it's going to continue in the direction that we've seen. I definitely would not be looking to move against the trend anytime soon, based on both fundamental as well as the technical analysis. I'd say anytime you can see a pullback, maybe to a trend line, something where you can get in the direction of the overall, that would be really the only smart play.
Okay, Dan, we're all out of time for today's interview. Thank you very much for joining me, and thank you very much for insight and analysis into the Forex marketplace.
Thank you, Remy.
This has been your New York Forex Market Buzz with Dan Cook from IG Markets. I'm Remy Hokie. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.